Brad Williams, Frugal Finance. Don't react to internet hype. Don't take the bait. The internet loves a gold rush. Bold fonts, fiery memes, to the moon chants. I'll beg you to jump in now before you miss out. But here's the truth. Markets don't reward FOMO, fear of missing out. They punish it. When social media lights up with hot tips and wild predictions, it's easy to get swept up in the hype. But what's trending isn't always what's trusted. And a viral trade? That can leave you holding the bag. We're here to shake off the noise, cut through the crowd, and explore how to protect your financial well-being before you buy into the buzz. Because smart investing isn't about chasing a herd, it's about knowing the terrain, so let's navigate it together. The rise of digital hype investing. In recent years, swarms of everyday investors have followed Reddit threads or TikTok hot takes straight into futures, metals, and other complex markets. The result? Sharp, often short-lived price swings in commodities like gold and silver, and even sharper heartbreaks. In one wave of silver buying, thousands of newcomers jumped in overnight, only to watch prices plummet days later. Why? Because the markets don't move on memes. They're driven by contracts, demand, and global forces. Without understanding the mechanics, expiration dates, leverage, physical delivery, you're flying blind. That's why the hype is so risky. It's loud, fast, and completely indifferent to whether you've done your homework. Markets aren't one size fits all. Imagine lending your car to a friend without explaining how the brakes work. Sounds risky, right? Investing without knowing the mechanics is just as dangerous. Commodity futures aren't stocks. You don't own a thing. You're just agreeing to buy or sell at a future date. Exchange-traded products might look simple, but their structures can turn volatile fast. So think of each market as a different vehicle, a sedan, a motorcycle, a semi-truck. All can get you somewhere, but they handle differently, require distinctive skills, and come with unique risks. Knowing the difference isn't optional. It's the only way to drive towards your goal instead of off a cliff. Time to tune out the noise. Here's a thought. What would your financial choices look like without the noise? No online influencers, no urgent all-cap headlines, just your personal goals and a clear-headed plan. Take a breath, zoom out. Whether you're planning for retirement, saving for a home, or just dipping your toes in investing, the most powerful step you can take isn't jumping on a trend. It's getting curious about what really fits your life. The markets will always move, but your peace of mind, your clarity, that's something you can anchor in education, not emotion. Build your strategy like a pro. Think of this like planning a road trip. You wouldn't set off without a GPS, snacks, and a tank of gas, so why invest without a plan? Start with the essentials. Only risk what you can afford to lose. Choose vehicles that match your risk comfort, and always read the fine print. If a fun strategy is a mystery, it's not the right ride. Futures aren't stocks, and gold bars aren't magical shields. Check a product structure, understand expiration dates, broker fees, and dealer spreads. Then chart a plan that fits you, your timeline, your goals, your peace of mind. The meme that mocks your wallet. Picture this, a pixelated rocket ship blasting off with your retirement fund on board. Fun? Maybe. Sound financial planning? Not so much. To the moon is catchy, but gravity always wins. Behind every flashy GIF is often a stream of regret posts from people who jumped in too late or didn't understand what they were buying. Let's get creative the right way. By being smarter than the meme, laugh at the GIF, sure. Share the joke, but then take 5 minutes to actually learn about the asset. That's how you make money. Moves that aren't just viral, but viable. Invest with your eyes wide open. Hype fades, trends die, but a smart investor learns to keep focused when the noise turns up. This is all about strategy, not speed. Knowledge, not knee-jerk. You've now seen how speculation can snowball into risk, especially when guided by crowdthink and quick fixes. So here's your new mindset. Question every guarantee. Ask where the advice comes from. Remember that what works for someone else might not fit your financial reality. And above all, slow it down. The best investors aren't the loudest. They're the ones who stay sharp, patient, and purposeful in their pursuit. Trade wisdom, not just hype. You're not here to gamble, you're here to grow. So take pride in doing what most won't. Taking the time to learn, to pause, to question. Investing isn't about chasing quick riches or viral wins. It's about building knowledge and confidence step by step. Today, you've peeled back the glitter and peered into the engine. That's powerful. That's rare. And it's absolutely worth it. Keep learning. Keep leaning into tools like simulators. Rely on trusted resources and keep coming back to your plan. Because when you stop chasing noise and start investing in you, that's when real wealth begins. Let's move forward wiser and stronger. If you have any advice, feel free to comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.